Let's do Hart Traders. I hope you've all seen that you have to work with a VAT rate of 14%. So please open your eyes and make sure that you read what is the rates that you're supposed to use in a question. S. Hart starts his business, Hart Traders, on 1 March 22 with a capital contribution of 90,000 Rand. He obtained authorization from the bank for an overdraft facility of 10,000 Rand. Guys, what is an overdraft facility? The bank says you can let your bank account run until you are overdrawn. In other words, you don't have 10,000 Rand in the bank. So by implication, you're going to borrow those funds from the bank, and that will put your bank account in a negative balance. It says, and I will allow you to continue using my money, i.e. the bank's money, up to a maximum of 10,000 Rand. And obviously, you are going to pay interest on that. But that is, in other words, not an accounting entry. That is only the indication of the limit of your overdraft facility. The business is registered for VAT. Assume that all amounts include VAT, except we noted otherwise. Then details of the transactions of March, and they want you to show the effect of the above transactions on the accounting equation. Make use of the table which neatly and clearly sets out the above. Show the amounts with which the equation changes, as well as the general ledger account which is affected. And then I gave you the format, and I want you to answer exactly in this format, otherwise it will not even be marked. I also tell you use brackets to indicate when an element is reduced. So if something is getting less, like owner's equity for instance, you have to put it in brackets. When it's going to increase, then obviously no brackets. And then I gave you an example. And the example was there the capital contribution on the 1st of March of 90,000 Rand. So if you're going to use this format that I gave you at the bottom of the page, after the required part, your bank statement of financial position. If you do not give me statement indications, you will be penalized, which is an asset that will increase with 90,000 Rand. And then capital, statement of financial position, owner's equity, that is 90,000 Rand. That must be an O for statement of financial position, 90,000 Rand. Okay, so let's have a look. Now, in a question like this, you must be extremely careful. You will see that you have a combination of source documents, and you have to record those source documents in date order, because sometimes it makes a huge difference if you do not follow date order. So in date order sequence, you have to do the transactions. Now they gave you the source document. So what is duplicates of receipts issued? It must have been a cash receipt. So that would have been recorded if I've used all my books of first entry in my cash book receipts journal. If we look at electronic funds transfers, that all those transactions would have been accounted for in my cash book payments journal. Debit card slips. Now, here they tell me it is payments. So cash book payments journal, check counterfoils. We don't use checks anymore, but let's say, for instance, that we did. Check counterfoil, that would have been a cash book payments journal entry. Cash sales, cash book receipts journal, original credit invoices from suppliers, the creditors journal. Duplicate invoices, that would be our debtors journal. And then also look here. Here they give me VAT excluded. There they give me VAT included. So be very wide awake. What are you working with? Duplicate credit notes. Now, if it's a duplicate credit note, it means that we've issued a credit note, so it's debtors allowances journal. And then we have our sundry transactions. Good. So let's identify firstly what transactions took place on the 1st of March. Now, we have already done that first transaction, so let's continue here. Duplicates of receipts issued on the 1st. To whom? To ABC Bank for a loan at 18% per annum, 50,000 Rand. So we have received a loan. So what has happened? Our bank account has increased with 50,000 Rand. So bank statement of financial position, 50,000 under assets. And then under liabilities, our liability statement of financial position has also increased with 50,000 Rand. Guys, sometimes when you see the V there, that's the Afrikaans abbreviation, start van financiële posisie. In English, you will have an O there, statement of financial position like there. So sometimes in the answers here, I give both languages. That is why some is a V and some is an O. Great. Let's check for another transaction on the first, and it seems that there is nothing. The next transaction seems to be the second. On the second, we have made an electronic funds transfer. Let's highlight that so you can see what we're talking about. Electronic funds transfer to Walton Bowes. We purchased property of 165,000 Rand. Now, that will mean then our buildings will be debited, so it will be increasing our assets with a VAT exclusive amount of 144,737. That equals 165,000 divided by 1.14 because we have to work with a 14% VAT rate. Our VAT input, that would be 14% of that amount, so that VAT input is either, it is easier to have a simple rule. Let's assume when it's VAT input, assets will increase because it's a debit, and then when it's VAT output, liabilities will increase because it is a credit. So VAT input, asset, statement of financial position, 14% of 144, and then bank will be credited also an asset that will decrease, therefore the brackets of a total of 165,000 Rand. The next transaction is on the third, and that is a debit card slip or a payment that we have made. So on the third, we have paid Quipco for equipment 1,650 Rand, and Quipco is not registered for VAT. So if Quipco is not registered for VAT, can they ever issue a tax invoice? No. Without a tax invoice, can I claim that? No. So therefore, I'm going to capitalize the full amount of 1,650 Rand. So equipment, asset will increase. I'm going to debit that account with a 1,650, and bank will decrease with the full amount of 1,650. The next transaction, let's check whether there's something on the fourth. Yes. We have issued a duplicate invoice, so that must, and this is a VAT inclusive invoice to Peru for the amount of 350 Rand. So that was sales that we've made to him. They're telling us that there is VAT included. So his account, the debtors account, will always be debited with a full VAT inclusive amount. So debtors control, which is an asset, will be debited. So the asset will increase with 350 Rand. Sales, that is an income account, and income will increase equity because it's a credit against my income. A statement of profit or loss, 350 divided by 1.14, 307 Rand, and then VAT output, let's take this as the rule. So it's a credit against VAT output, so we're going to increase our liabilities with 14% of 307 Rand, which equals 43 Rand. Great. The next transaction is on the 5th. A duplicate receipt was issued Peru for settling his outstanding debt. Now, we have just sold to Peru, and we sold to him 350 Rand. So we have already accounted the sales transaction. All that's happening now is that he's paying his outstanding debt. So let me just find that one. Bank will be debited with 350 Rand. So that is an increase in assets. And our asset debtors statement of financial position will decrease with the 350 Rand. So the one asset will only replace, in this instance, the other asset. Good. There's another transaction on the 5th. Eiendomme for the rental of part of a building, 330 Rand. Now remember, on business premises, that is applicable on rent. So we are going to pay 330 Rand or duplicates of receipts issued. So we received that rental income because we've issued a receipt. So bank will be debited with the 330 Rand, the full amount. Rental income is going to be credited with a VAT exclusive amount, and then obviously VAT output with a VAT on the amount received. So bank debit, assets, 330 Rand. Rental income, statement of profit or loss, it's an income, so equity will increase. 330 divided by 1.14 is 289. And then VAT output, that is a liability that's going to increase. 14% of 289 equals 41. If I add 289 plus 41, I am back at the 330 Rand. Great. Also on the 1st year, there was an original credit invoice from the suppliers. So that credit invoice means that we have purchased something. So we've purchased stationery here for an amount of 280 Rand. So if we're going to treat stationery as an expense, then it means that our stationery is going to be debited, or our expense account is going to be debited with a VAT exclusive amount. Now here clearly they tell us that these amounts exclude VAT. So for that reason, the expense is going to be 280 Rand. It reduces equity, so it's a minus or a bracket sign. You must actually use a bracket and not a minus because it's very confusing to see that little minus. So this, let's make it a bracket. 280 Rand. The VAT is going to be VAT input, so it's 14% of that under assets. The asset is going to increase for 39 Rand because it's also a debit, so it's a debit and a debit will give us a total credit statement of financial position. Creditors, liabilities is going to increase with a full VAT inclusive amount of 319 Rand. On the 9th, we're also buying packaging material from Herald for a VAT exclusive amount of 460,000. So or 460 Rand. So we're going to treat this exactly the same. The packaging expense account is going to increase, so therefore equity is going to decrease. So it's a reduction of equity of 460 Rand. 460 times 14% is the VAT input that we can claim. So that is 14% of 460 Rand. And then creditors is going to be credited, so our liabilities will increase with a full amount. 460 Rand plus 64 Rand equals 524 Rand. The next transaction will be on the 10th. It's not here, it's not here, it's not here. On the 10th, we have issued a duplicate invoice that included to C. Daniel for 410 Rand. So that was a sales transaction that occurred. So debtors will be debited, so asset, it will increase with a full VAT inclusive amount of 410 Rand. Sales is going to be credited, so owner's equity is going to increase with 410 divided by 1.14 equals 360 Rand, and VAT output is a liability account, so 360 times 14% will give us then 50 Rand. Then also on the 10th, under sundry transactions, we received a check on 5 March from AIDA. It was returned by the bank marked RD. So we have received initially some amount of AIDA, remember here, where they paid us 330 Rand. And now the bank has informed us that they didn't have enough money in their bank account, so they're going to reverse the transaction. Now, that is exactly what you should do in your books. You should also reverse the transaction. Let's just find the original one. Yeah. Here we have recognized in our bank account 330 Rand. Now we're going to take it out. So in the new transaction, that will be a minus. Rental income. We've increased equity with 289. Now we're going to decrease equity with 289. That output, now we are going to reverse that. So the 41 Rand, you can either show as a minus under liabilities, or you can show it as a 41, an increase in assets. So the 289, it's going to reduce equity, just the opposite than what we've done in the original entry. That input, I've said here it's a debit. Therefore, I'm going to increase my assets. But I also say here, if you have decreased liabilities with that 41 Rand, because the original entry went against that, there was the original one against liabilities, and you're just going to take it out there, that is 100% correct as well. I would have marked that correct. And then our bank account balance will decrease with 330 Rand, and therefore that is then in brackets. Good. Our next transaction, we also issued on the 12th of March a duplicate receipt for G. Daniel. He settles his account. Remember that we've sold to G. Daniel at some stage an amount here of 410 Rand. So again, it's only going to be an exchange of one asset for another one. Bank statement of financial position, that's the asset that's going to increase. And debtors control statement of financial position, that is the asset that's going to decrease with the payment that is going to make. The next transaction is on the 12th. Duplicate of receipts issued on the 12th. We've done that one. The next one then, must be on the 14th. Pierre Roux credit sale on 4 March. It was agreed that the correction regarding the amount paid will take place against Pierre Roux's account. So we have sold to Pierre Roux, here, 350 Rand. Then obviously there was some kind of mistake, and we have to rectify his account with 55 Rand. So his account is going to reduce with 55 Rand. Debtors control statement of financial position. Sales is going to reduce with a VAT exclusive amount of 48 Rand. And then it's going to be a debit. So here, 48 times 7, it's going to be VAT input 7, but you could have also reduced your liabilities with 7 there to say it was a reversal of the original VAT that we've raised against him, therefore liabilities should decrease. So it's either an increase of asset or a decrease in liabilities. On the 15th of March, let's see. Check counterfoils, we've paid wages for the week, 465 Rand. There's no VAT applicable on wages. What is wages? Wages equals an expense, which is a reduction of equity, 465, and our asset account is going to be credited with 465 Rand. Another transaction on the 15th, must be under sundry transactions, is Hart takes goods for his private use with a cost price of 150 Rand, VAT excluded. So what do we have to rectify? We have to rectify our inventory record. It is the cost price, inventory is stated at cost, so we're going to take the cost price of those items out of his account. And then the receiver of revenue, so here, inventory statement of financial position, is the asset is going to reduce with 150 Rand. Then the receiver of revenue says, yeah, but remember initially when you bought that inventory, I allowed you to claim VAT on it. I want my VAT back, please. So therefore, I have to raise 15% on the cost price of these goods, which equals a 21 Rand. So I'm going to credit my VAT output account, which is a liability account, with 21 Rand. And the total of those two, 171, is going to be posted against drawings, and drawings is going to reduce my equity. Please note, statement of financial position. It is not an expense account, guys. It reduces the original capital contributed by the owner of this entity. Therefore, it goes to the capital account itself. On the 21st of March, there it is. We made an electronic transfer to Herald Druckers for the amount outstanding today. Now remember that we had the sales, but that was a VAT exclusive amount. So you will have to work it back to the VAT inclusive amount as you have posted it to your account. So 280 plus the 460 times 1.14, the amount we're going to pay and that we owe him is 844 Rand. So our assets is going to reduce as well as our liabilities with the amount of 844 Rand. Great, then on the 29th, cash sales of inventory according to the cash register VAT excluded was 14,390. 50% of these clients are not registered for VAT. Does it matter? It doesn't matter, because it doesn't matter whether your clients are registered for VAT or not. You are obliged to pay over the VAT to the receiver of revenue. It's according to VAT exclusive 14,390, so the amount that we received in our bank account will include the VAT. 14,390 will be our sales figure, and then we have to pay over VAT on that figure of 14,390. So sales will increase equity. It's a credit against equity, it's the income account, 14,390, statement of profit or loss. VAT output will be 15% on the 14,390. Liability increase, credit 2,015, and the two of them together will be my total amount that I've received in my bank account. So my assets will increase with 16,405 as per my statement of financial position. And then the last one, there, electronic funds transfer on the 31st, first payment of the loan, 2,000 Rand. So my asset is going to reduce with 2,000 Rand bank, and my liabilities loan account statement of financial position is also going to decrease, liabilities of 2,000 Rand.